Hello and welcome to the Rising Tide market update for the September quarter 2024. Over the next couple of minutes, I'm going to walk you through the performance of the September quarter, what happened during the September quarter, going to touch on a new internal benchmark here at Rising Tide, an interesting and timely chart, and then wrap up the conversation with why we like index investing. Now, the September quarter ultimately ended up being a really strong quarter in global stock markets. However, there was significant volatility seen in August, where global markets fell roughly between 5 and 10%. This pullback was driven by economic growth concerns combined with fear of a slow-moving Fed, the US Federal Reserve. We did see quite a large pullback in some AI-driven stocks, which were running very hot into the September quarter. What added to volatility was currency market volatility driven by moves in Japan and their central bank. This only added to fear during August. However, optimism has been very hard to squash here in 2024, and the markets have returned to all-time highs. This was driven in part by Chinese market stimulus, so their government coming in and supporting the market, the biggest we've seen since the pandemic, and the US Federal Reserve, which came in and cut interest rates finally by 0.5%, joining a growing number of central banks cutting interest rates as inflation moderates and economies slow down. Now, we are doing quite a lot of work here at Rising Tide on a new portfolio called the BlackRock All Growth. You can see here that it's got 98% allocation to growth assets, only 2 to defensives. So for all intensive purposes, a model portfolio 100% allocated to growth assets, that being Australian equities, developed equities, so US, Europe and Japan, among a few, and emerging equities there. So really good allocation to the global stock market. The all growth portfolio holdings are on the screen here. These are the top 10. The largest companies in the US and Australia are what rises to the top. So nothing speculative here. A very strong list of blue chip, powerful companies that will grow over the long term. Now, the performance during the September quarter was up 4.5%. So a good quarter, and which came on the back of a very good 12 months with the BlackRock All Growth portfolio up just north of 20%. You can see here 3, 5 and 10-year returns ranging anywhere between 8 and just north of 10%. So really good returns for the patient investor that is willing to wait out those periods of volatility that we saw just like in August. Chart here showing the September quarter performance. You can see the dip here in August and strong recovery to the end of the quarter, and then zooming out the last 12-month performance. A really strong up and to the right march for global markets is what we've seen over the last 12 months. Now, a chart we've touched on in the past here shows the US market and intra-year declines, and then where that market finished at the end of the year. So we can see every year there is a decline in stock markets, typically between 5 and 20%, some much larger. But more often than not, we do see markets recover. So what did we see in 2024? Markets in the US fall 8%, year to date up 21%. So this is part of the course with investing, this type of volatility. Wrapping the conversation up here is why we like index funds, and this is a statistic that we do talk to quite a lot. We can see here that over the last 10 years in the US, 85.6% of funds have underperformed the US market. That means only 14.4% of funds before fees outperformed the US market. So when we are index investors, we are low cost investors, and we will get the market returns. And that means we will outperform 85.6% of funds out there and get market returns, roughly 8 to 9%, which is a really good outcome when investing for the long term and is absolutely going to help you achieve your goals. That wraps up the September quarter update. As always, please reach out to myself or any of the advisors here at Rising Tide to talk about anything in this slide deck or anything else that comes to mind. Thank you.